This is the Friday, May 5th, 2017 version of the Market Plus segment. Joining us now is Elaine Kub and Walt Hackney. Folks, welcome back.
Thank you.
We had a big discussion on the program. Covered a lot of ground, but we're not done. We've got several folks that have submitted questions. This was, as you mentioned, Elaine, an interesting week. And I wanted to start with a question from our good friend Phil up in Ontario, Canada, on Twitter at Agrodome. Phil wants to know, does the U.S. wheat harvest still matter? Do wheat acres still need to continue to decline? And is the world awash in wheat?
Well, it still matters. I mean, if we lost every ounce of wheat, it would be hugely inconvenient logistically. I mean, we have a huge domestic consumer base for bread and pasta and such. If we had to import all of that wheat, so yeah, it matters. But what was the second part of Phil's question?
Do U.S. wheat acres need to continue to decline? We were at the lowest wheat acres since 1909. We're going to abandon 1.5 million in Kansas. Clearly, we need to give up more acres.
Maybe yes, maybe no. But I mean, we can say this for all feed grains globally. I mean, we have a oversupply or an abundance of feed grains globally. So I wouldn't even necessarily pick on U.S. wheat acres as what needs to decline here. And
Canadian
maybe
wheat acres,
nothing
should
does.
They cut back?
There we go.
Yeah, Phil, come
Phil,
on.
Yeah.
Okay.
I don't know that Phil plants wheat, actually.
I don't either. But is the world still, I mean, when you look at it, the global glut of feed grains in general,
right,
wheat in particular, how long do you anticipate us being stuck in this oversupply scenario?
Until somebody gets a good, solid drought, and preferably somebody in South America, right? I mean.
Well, and if we get a South American drought, would it do much for wheat worldwide? Would we need an Australian drought?
Oh, for wheat prices, sure, yeah. I mean, or Ukraine would be a good place for a drought, yeah.
Okay,
yeah.
Or more political unrest or something.
Something, yeah.
Okay, but until we get...
We shouldn't be flippant about this stuff
not.
Because it's people's livelihoods. But yeah, we need something to shock the market.
And a massive, catastrophic spring blizzard in the heartland of the U.S. didn't do it.
Yep.
Right. All right, so our next question, Walt, on the program, we got busy discussing cattle. We did not get a chance to discuss the pork market, and Dietrich has a question. He's asking, along with this beef demand, will this cause any spillover into the hog market? If folks are willing to go to a grocery store and spend $15 a pound on ribeye, should we anticipate some increases in pork prices retail that could translate back to the producer?
I don't know if your questionnaire is referring to the nearby or a longer pull. We had that scenario up till about 2 months ago.
Okay.
We had a huge demand because of cheaper pork and cheaper poultry in the retail, and the pickup was phenomenal, and it's still good. But to say that a consumer is now going to switch back over from $8 for 8-ounce fillets, or whatever your point was earlier, probably not. I think that the economy right now is going to be indicative of people preferring possibly some luxury cuts of beef to what we got used to, cheaper luxury cuts of pork.
Okay, so you continue to see that hog market just kind of flop around in here. We're up a little bit on the week, but there's no real reason for it to move too much higher given the supply.
The analysts missed the inventory for the fourth quarter and the third quarter, and not to be critical, but there was a lot of things they didn't anticipate when they were forecasting a huge increase because of expansion in the facilities, and it didn't occur. Mm-hmm. There is some expansion going on out here, but not in the magnitude of what had been initially programmed into the thing, say, back in January.
Back when we were bouncing around $45, $46 in pork.
Exactly.
Okay.
And so as a result of that, I see the pork industry, to say stumbling around, I say it'll stabilize.
Okay.
And I think it's a healthier trend if it does stabilize, as long as the cost of production is allowing those producers to have a profitable return on their production.
Okay.
And they deserve it. It should be there, and it ought to be there. And if corn goes like y'all are talking in regard to markets, and possibly soybeans, if they do plant the excess that some people have indicated, then possibly the feed costs are going to dictate heavier hogs.
Sure.
And if it dictates heavier hogs and more tonnage, that will not be a plus to the hog market.
Nope. Same story as beef in 2015.
Exactly.
And potentially beef in December of 2017.
You got it.
All right. Elaine Kub, next question is for you. We talked a lot on the program that you didn't see a lot of movement to the upside in corn. We're up here at 388. We're pretty decent. So Josh's question on Twitter at JoshDeal1 says, what can push this corn market further down? What do we not have priced into this thing?
Oh, that it could go further down.
Yeah.
Well, I mean, if you had, if you had any number of things, you could have a higher dollar, suddenly change export projections, but actually in the upcoming WASDE report, those corn exports are probably going to look pretty good. You could have any sort of geopolitical problem, like really spook commodities in general. And in fact, there is some concern about, we saw oil prices really fall apart.
Yeah, what happened there?
I think the thought was that China's economy is kind of slowing, or their rate of growth is slowing. So there was some spookiness about overall global demand of raw materials. So that is the kind of thing that corn can follow along on. But, I'm not terribly bearish on corn. I honestly can't come up with a lot of scenarios that would, make it fall into a sub $3 place. I mean, I think we're pretty much where we're going to be, and we're just, the question in farmers' minds ought to be, are we here and we're going to get a boost in this summer for sure, which we don't know, or are we just here and then you better sell here, this is it.
And your take today is, well, we're here, take advantage of it.
Some of it. I would definitely leave some open, for sure I would, because I believe in the seasonality of the markets, and you're going to have the most risk premium when the crop is at the most risk, which is probably June. So I would still keep some gambling bushels around, definitely, and I still believe in the summer high, but I don't want people to bank their entire production on this thing that may or may not happen.
Because last year you called June 18th,
I know,
and you were right.
And it could still happen, but I don't want to be the one responsible for somebody not locking in a good $3.40 cash price.
Okay, now I want to ask you the same question on soybeans, given that we do have some spookiness in China, plus potentially additional acres in this country. How aggressive do I want to be locking in November soybeans today?
I would be more aggressive. I would feel better about selling soybeans than I would about selling corn right now, for sure.
Okay, and would you be selling cash beans right now if you had to, would you be forward contracting?
Yeah, I would be locking in, where you're going to take those beans. And if you feel if something changes in the next 6 weeks or something, you can go back in and buy calls or buy futures. I mean, you can get some upward exposure again if you need it. But at this point, I'm way more nervous about the downside potential in soybeans. Where
does the downside, from a statistical analysis perspective, where are you seeing the downside? Where could we go?
We have, in modern times, seen soybeans with an $8 handle on them, so that could certainly happen.
Well, modern times, last winter.
Yeah, exactly.
I mean, winter of 15.
Yeah, it wouldn't take much. And in the volatility of these markets, when you see crude oil, for instance, fall, 6% in a week, you could certainly see soybeans do the same thing.
Okay. So you want to be aggressive locking it in. You're going to buy puts on the beans you sell. Or, excuse me, buy calls on the beans you sell.
I don't see a lot of reasons why I don't know we don't have a problem yet to feel bullish about the soybean market.
Isn't that when you buy the calls? When there's no problem there and they're cheap?
I will say that, absolutely. And that's another argument for buying puts rather than selling cash. If you're not sure of where you want to take them yet and you want to, and you're willing to play with puts, you have an account that you want to put that in, this is a good year to do it. This is an excellent year to be buying options. They are cheap.
Low volatility, low price. All right. Now, we've got a final question for you. And, Walt, we kind of touched on this. You've talked about the strength of the U.S. economy, the consumer willing to go out there, buy premium cuts. Brian, again, Bayless Beef in Southeast Iowa, wants to know, how does our higher beef value stack up worldwide? Can we get international buyers with beef at this price, or are we mainly looking at U.S. purchasers?
As we speak, and that doesn't include possibly last week or this week.
Okay.
Those are going to be deal breakers. last week and this week will be deal breakers. It's going to be interesting. I'm not so worried about the people importing our beef. I'm not so worried about that and their ability to economically take it and love it, as I am what our local retailer is going to do in respect to this volatility that's come into this market. Now, this retailer isn't a rookie, and he is not stupid, and that pace that he was on with $1.45 fat cattle a week ago, and wherever it ends up this week and going into next week, is going to be dramatically different, it would appear to me.
Yeah.
And I think the role is going to, if you will, the onus is going to come back on our local retailers.
Well, and here's an argument I've heard from several cattle feeders. They say, look, cattle prices dropped, a record-breaking drop. We went from 172 cash down to 96 and 92 cash trade. Retail beef prices didn't move all that much. There was a whole lot of margin being captured by the packer and by the retailer. So the cattle feeder argument I've heard is let them eat a little bit. You know, let the retailer packer margin erode to carry these high beef prices. In your experience with both packers and retailers, Walt, do they let that happen very often?
If it would occur,
Okay.
you'll find the packer, because of his shrinking margins, you'll find the packer reducing his kills. 624,000 cattle last week.
Yeah.
It'll be interesting to see what it is next week if the retailer takes a hold of this beef and drives it down as a result of this mercantile activity of volatility that occurred this week.
Yeah.
And there's so much pending right now in regard to the psychology of this market. It would be almost mundane to make a comment on my part of what way it's going to go until I see where they're going to handle the product next week.
Okay. A lot of volatility. Oh, yeah, Elaine.
I got kind of an ignorant question, but regarding Memorial Day, all of that has already been schedule-wise. The Packers have already dealt with their Memorial Day schedule.
Well,
so the decisions they make, like these pending decisions you're talking about, these are June decisions, probably.
Yes. Actually, you got a 21-day factor they use in the movement of beef from the packer to the retailer. That is in process right now as we speak. And so those products that are involved in that 21-day process are probably 50 to 70% priced as we speak.
Okay. All right. A lot of volatility, a lot of craziness this week, and we've got a question here for our Ask the Analyst segment. This question came from Michaela up at Iowa State University, and we encourage all of you, if you are students, whether at school, high school, or college level, get out your iPhone, shoot us a question. We want to hear what you want to know. Michaela's got a question for you two as a young producer.
Coming from a cow-calf operation as well as a feedlot operation, how do we see the implementation within markets as future agriculturalists?
Well, my impression of an agriculturalist is a person that's another rung in the expertise ladder higher than where we are right now. And I think a graduating senior from any college in agriculture who intends to be an agriculturalist is going to have to make an intensive effort on their part to become very astute at futures brokerage, language, instrumentation, and appliance. I think that will be the future of an agriculturalist if he's going to protect his production.
Elaine Kub, as an agriculturalist who is proficient in the futures and their nomenclature, do you have any additional thoughts?
Yeah, it reminds me of a conversation that I think you and I have had, Mike, that agriculture is unique in that it is made up of many thousands of small business owners, and it's the only industry that's like that. You have mining or airlines, all of those businesses, they have, very professional people making their hedging decisions and making their commodity buying decisions for one giant company, and there's maybe 5 companies in the entire industry. Agriculture has thousands of very small business owners, but they need to be as professional, as Walt is saying. They need to be as educated and as professional and as dedicated to managing their positions the same way.
Walt, did you have a follow-up?
If I could interject one point that Elaine hasn't made, and possibly out of her humility, I would say that a producer today has got to absolutely understand the nomenclature, as you indicated. Specifically, you can go back, Mike, to the era that I come from educationally, and Morrison's Feeds and Feeding was our Bible. And we had to nearly memorize that as far as the ABC values of different grains and their productivity in regard to nutrition. Today, the Bible, in my opinion, of a graduating agriculturalist in our colleges, his or her Bible needs to be a course and an intensive course in their education process of brokerages and the terminology.
You bet. Interesting side note, I was at a hipster coffee shop. I was in Chicago, and they had a bunch of old books on the shelves.
Oh, yeah.
Guess what one of them was?
Morrison Feeds
Morrison Feeds and Feeding. Wow, things change.
We nearly, we're not.
Well, let me wrap this up here, and then we'll pick it up. Join us again next week, ladies and gentlemen, when Mark Gold will sit across from me here at the Market to Market table, and we'll explore one farming community's efforts to clean up its water supply. So until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.